So you've learned the basics of stock investing. But now comes the big question. How do you actually choose your first stock? With thousands of companies in the market, beginners often feel confused and overwhelmed. In this video, I'll show you a simple method to pick stocks smartly. One of the biggest beginner mistakes is buying stocks based on social media hype, random YouTube videos, or friends' recommendations. That's dangerous. A stock is not just a number moving on a screen. When you buy a stock, you become a small owner of a real company. Start with businesses you already know and understand. For example, tech companies you use daily or brands you buy regularly. Here are 5 simple things beginners should analyze before investing. Let's start with revenue growth. Ask, is the company making more money every year? Growing revenue usually means the business is expanding. Some companies earn huge revenue but still lose money. Beginners should focus on companies that are consistently profitable.
Too much debt can hurt a company badly during difficult times. So check whether the company has manageable debt. Less debt usually means lower risk. Why is this company special? Maybe strong brand, loyal customers, unique technology, global popularity. Great companies often dominate their industry for years. Think about the future. Will this company still be important after 5, 10, or 20 years? Companies connected to AI, technology, healthcare, renewable energy, digital services often have strong long-term potential. Never put all your money into one stock. Even great companies can fall unexpectedly. That's why diversification matters. Instead of buying only one company, spread your investments across different sectors: technology, healthcare, banking, consumer products. Diversification reduces risk and protects your portfolio. For beginners, ETFs and index funds are excellent options because they automatically diversify your money.
The stock market is not a casino. Many beginners lose money because they chase fast profits, viral stocks, and risky trades. Real investing is boring sometimes. And that's okay. The goal is long-term wealth building. Even legendary investors like Warren Buffett became rich through patience. Small investments made regularly over many years can grow into something massive. You do not need thousands of dollars to start investing. Many apps allow beginners to start with very small amounts. Your goal is not making huge profits initially. Your goal is learning. Start small. Study companies. Gain experience. So let's quickly recap how beginners can choose stocks smartly. Avoid hype stocks. Invest in businesses you understand. Check revenue and growth potential. Remember, successful investing is not about luck. It's about patience, discipline, and smart decisions. If this video helped you, make sure to like, subscribe, and comment below. What was the first stock you ever invested in? Thanks for watching.